much confidence. Yeah, I know I grew up in the ghetto. Too much confidence. Bad bitch heading on a nigga. Yes, I'm alright. Sky fly high like a kite. No, too much confidence.
Hi guys, I hope you're good. My name is Sibusi Somtiniso and I would like to welcome you to my YouTube channel Forex Lessons from a Poor Background. So in this channel, I'll be sharing some information that I've got on Forex trading, and also be giving you guys about the market recap and giving you everything that you're going to need to start trading. So in this video, I'll be strictly speaking about Forex, technical analysis, and about fundamental analysis. So without wasting any further time, let's jump to the slides. So as I've already mentioned, I'll be already speaking about Forex, technical analysis, and fundamental analysis. So before I can get to each and every lesson there, I'm going to start with explaining what you're going to need before you start trading. So what you need to start trading is that you need to get information about Forex, you need to understand the language of Forex, and also need to have a strategy. Second thing is that you need to open a demo account and trade on it before you can open a real account. So a demo account is a virtual money which helps you improve your education, experience, and psychology towards the market. Once you get done with the two things, then you can get started on a forex market and start trading. But make sure that when you start trading on your real account, make sure that you deposit only the money that you are willing to lose, as that is the start of building your solid base of trading. So if you would like to hear more about how to open a demo account, you can go to my public Telegram group. There you can see the link I also inserted there on my slide, and also I'm gonna put the link there on the description below. Now, starting with Forex, we're going to cover what Forex is, what is traded in Forex, how to make money trading Forex, and the advantages of Forex trading. So, Forex trading is a short term for foreign exchange. It is a global market that allows one to trade two currencies against each other. So, for example, let's say you have rands and then you're here in South Africa and you want to buy a shoe that is in Turkey. So, to get that shoe, you'll have to sell your rands in exchange for the euros. So, you usually do this thing online. So if you see a pair of shoe that is online and then that is worth 50 euros, what you will pay there is that the bank on that website there you will have to pay 1,000 rand. So when you're doing that, that 1,000 rand is not an exact price, it's somewhere around there. But when you do actually that transaction, that exchange, that's when you have actually participated on the market. So, what is traded in Forex? In Forex, we trade money. And then in Forex, you and I, we are called retail traders. So, we trade the money using currency pairs on what we call market charts. So, these charts show us price of the currency as a direct reflection of the market's opinion on the current and future health of its respective country's economy. These charts are also provided to us by what we call brokers, which is what we're going to explain later. So now let's go and quickly discuss on forex currency pairs. So again, speaking about what is traded in forex, we're going to speak about major currency pairs in specific. So there are potentially a lot of currencies that you can trade, but we are only going to cover the major currencies. So major currencies are called major because they are the most heavily traded currencies and they represent some of the world's largest economies. So we have 7 of these currency pairs. First one is the Euro USD, GBP USD, USD CHF, USD JPY, AUD USD, SAT USD, and USD CAD. Now, you need to note that the first 4 pairs that I have mentioned there are the ones that are highly liquid. So it means that they have a high volatility. Now, how to make money trading Forex. So, in a market, you can either buy or you sell. That's simple. So, the objective in trading is to exchange one currency over another. So, specifically, the currency you buy on, you hope it might increase in value compared to the one you sold. So, in every foreign exchange transaction, you are simultaneously buying one currency and selling another one. Now, I'll now now we're going to speak about how to read a currency pair. So earlier we have already discussed that currencies are always coming in pairs. Now, speaking about them, I'm gonna giving you more information about how to read the currency pair. So let's take for example GBP USD. So the first listed currency there on the left of the slash is what we call a base currency, and then the second one is that is on the right of the slash, we call it a quote currency. The base currency is the basis for the buy or sell. If you buy GBP USD, you are buying the base currency GBP and simultaneously selling the quote currency USD. Now, moving on to long and short. So, when you buy, you want the base currency to rise in value and sell it back at a higher price. And when you do that, we often call it in Forex going long. So, when you sell again, you want the base currency to fall in value and then you buy it back at a lower price, and that we call it going short. So as retail traders, we can either go long or go short, meaning you can either buy or sell. We are not limited to only do one thing. Now, speaking about the bid, ask, and the spread. When you're opening a chart with your own broker, you'll find out that the currency pair you in is quoted with two prices, the bid and the ask. So, what is the bid? The bid is the price at which your broker is willing to buy the base currency in exchange for the quote currency. It is the best available price at which you as a trader can sell to the market. The ask is the price at which your broker is willing to sell the base currency in exchange for the quote currency. It is the best available price at which you can buy from the market. Now, the difference between the bid and the ask, we call it a spread, and that is how brokers pay themselves for facilitating your trades. So brokers usually pay themselves using the spread, and also sometimes they can use commissions. Now, moving on to a pip. So, pip stands for price in percentages. It is the unit of measurement to express the change in value between two currencies. Looking at the price charts, you will notice that after the comma, they are either 4 digits or 5 digits. In most currency pairs, the fourth digit is what we call a pip. If, for example, we take USD CHF and then its price is 0.9703, then the digit 3 is where we calculate our pips. So meaning that a change from 0.9703 to 0.9704 will give us what? 1 pip. Other pairs, like JPY pairs, they calculate their pip on the second digit. So for example, if you notice here, USD JPY, it has 107.84. So that 4, that's where we're going to calculate our pips. So we're going to look at the change from 4. So a change from digit 4 to 5, that's going to be 1 pip. So now we're going to move on to a lot. A lot is the number of currency units you're willing to buy or sell with. There are 3 different lot sizes. The first one, the standard lot, which is about 100,000 units, and then on MT4 it's 1.00, and then the mini lot, which is about 10,000 units, and at MT4 is 0.1, and then lastly the micro lot, that is like about 1,000 units, that one is 0.01. It is recommended that for beginners the lot size that you should use is 0.01. So speaking about leverage, you are probably wondering how a small investor like yourself can trade such large amounts of money. This is because your broker is willing to borrow you to enter trades. So this amount depends on your broker and what you feel comfortable with. Typically, the broker will require a down payment, also known as a margin. So let's make an example. If the allowed leverage is 100:1, and you wanted to trade a position that is worth 100,000 USD, but you only have 5,000 USD in your account, then your broker will set aside 1,000 USD as a deposit and let you borrow the rest. This 1,000 USD is not a fee, it's just a down payment. So meaning that you're gonna get it back when you close your trade. Now moving to margin. To define margin, I would say margin is the down payment you give to your broker, which gives you the ability to enter into positions larger than your account balance. With little bit of cash, you can open a much bigger trade in the forex market because of what? Of the margin and leverage. And then with just a small change, price moving in your favor, you have the possibility of ending up with massively huge profits. Same applies with loss also. So if the market moves against your favor, then you have the possibility of ending up with massively huge losses. Now, last part, the advantages of Forex. So Forex is highly liquidity, it has low barrier to enter, and then it has better risk management. You can trade it anytime you want, that is from Monday to Friday, 24 hours. And then also it has a low transaction cost. So more will be discussed when I explain how to use MT4. And again, I will be shooting a video on the public group where I show you guys how to use MT4. So make sure that you join the public group there. You can see the link there on the description below here on my channel. So we can move on to the next lesson. So now we can move on to the second lesson, that is technical analysis. And now in this lesson we will be cover what technical analysis is and how do technical analysts trade and why technical analysis. So let's get into the first bullet. So the first bullet point is, what is technical analysis? Technical analysis is the framework in which traders study price movements. In theory, a technical analyst can look at historical price movements and determine the current trading conditions and the potential price movement. In technical analysis, all current market information is reflected in the price, which then conclude that price action is all one would really need to make a trade. So the only thing that you do as a technical analysis is that you study price action. I'm also doing price action, and the only thing that I do is that I analyze on the market, and by looking at the analysis and the patterns that I see there, that's where I can see my overall direction for the week or for the month. How do technical analysts trade? So technical analysts look at the historical price movements, that is using the charts. They spot the rhythm, flow, and trends in a price and then trade what we call an edge. So what is an edge? So an edge is nothing more than an indication of a higher probability of one thing happening over another. So in a nutshell, technical analysts identify patterns and determine probabilities of the future direction price. So why technical analysis? So in technical analysis, what is nice about it is that the patterns on the market tend to repeat itself. Technical analysts look for similar patterns that have formed in the past and will form trade ideas believing that the price could possibly act the same way that it did before. Technical analysis is less much about prediction as it is about probability, which is what you're going to explain also in the upcoming videos. So technical analysts use what we call factors of confluence to help them identify their statistical edges, and also we will discuss that later on. So in a nutshell, this is basically what technical analysis is all about. So what you need to understand is that technical analysis is also very subjective. But if you want to know why I'm saying that, you're also going to see that on the videos that I will be uploading in the upcoming weeks. So now to our final lesson, that is fundamental analysis. So in fundamental analysis, we only want to discuss what fundamental analysis is and how do fundamental analysts trade. So let's get into it. So what is fundamental analysis? Fundamental analysis is looking at the forex market by analyzing economic, social, and political forces that may affect our prices. It is the supply and demand that determines price, or you can say the currency exchange rate. So this supply and demand only gives volatility, that is the speed on the market, not the overall direction of where the price will go. And B, it is only technical analysis that helps you anticipate where the overall direction of the market might be. How do fundamental analysts trade? As a fundamental analyst, you have to understand the reasons why and how certain events like an increase in the interest rate affect a country's economy and monetary policy, which ultimately affects the level of demand of its currency. The idea behind fundamentals is that if a country's current or future economic outlook is good, its currency might strengthen, thus making it volatile. So, in a nutshell, the better the economy, the higher the currency volatility. So, that's what fundamental analysis is all about. So, thank you so much, guys, for watching this video up until this very end. Make sure that if you like the video, you're gonna hit the subscribe button, and you also like and make sure that you comment and tell me what you think about this video. And if you can also click the notification bell so that you can be updated when I'm uploading more videos. And also, this is what Forex lessons from a poor background. If you would like to join to the Telegram group, you can click the link down in the description below. And also remember, this group is mainly for the information about Forex, so that it can help you get you started, or maybe it can increase maybe your financial intelligence or your financial literacy. Remember guys, it is not the asset that can make money for you, but the information that you have about that asset that can. So thank you guys so much, and see you next time. Ciao. In a nutshell, the better the economy, the higher the currency volatility. So that's what fundamental analysis is all about. So thank you so much guys for watching this video up until this very end. Make sure that if you like the video, you're gonna hit the subscribe button, and you also like and make sure that you comment and tell me what you think about this video. And if you can also click the notification bell so that you can be updated when I'm uploading more videos. And also, this is what Forex lessons from a poor background. If you would like to join to the Telegram group, you can click the link down in the description below. And also remember, this group is mainly for the information about Forex, so that it can help you get you started, or maybe it can increase maybe your financial intelligence or your financial literacy. Remember guys, it is not the asset that can make money for you, but the information that you have about that asset that can. So thank you guys so much, and see you next time. Ciao.